Hello traders, welcome to the LFB and our global video charting review. This is for Friday the 13th of May 2011 and this is the dollar index and currency review. My name's Mark O'Haig from the LFB trade desk. We do ask that you pause the video, read the disclaimer and accept what's posted there before moving forward. Very little newswire action regarding the dollar index during the course of this week. It was all last week, the previous week at the European Central Bank press conference and Q&A after the rate decision where Jean-Claude Trichet, the president of the ECB, really sunk his teeth into the US administration standing behind their jawboning, their talking up of a long dollar policy, and it was extraordinary in regard to the impact, because it was in direct response to those comments from Jean-Claude Trichet that the euro against the dollar took a dive and the dollar index started to move higher. Then playing catch up, the dollar would have been expected to have already been gaining in strength and momentum as the commodity markets had dropped and the equity markets were selling off, but that didn't happen. It really was pivotal and shows us that in the current market conditions, in the middle of an earnings season as well, that fundamental headlines really can drive price action and can change sentiment on a dime. That's why the LFB trade desk do pay close attention to the red flag economic releases, and we do send market alerts out to clients when something's about to hit. We're going to take a look at the technical review of the currency pairs, understanding that it's going to be the fundamental drivers that will move direction, and then we'll pick up the price points of note as we go. There's an intraday view of the dollar index. Dollar index is made up of euro. Nearly 60% of the dollar index is weighted towards the value of the euro. The Great British Pound makes up about 15%. The Japanese yen makes up about 15%. Then we've got the Canadian dollar, the Swedish krona, and we then have the Swiss franc that make up the balance of the weighting on the index. The dollar index sideways crawl now. We've been in this for 2 sessions. We are trading very close to the 50-day simple moving average. That's that green line in here. Although we're on a 30-minute chart, that is the daily 50 simple moving average. Very important technical price point of note. That's upside resistance. That's also sitting at the neutral swing point, which was developed from the previous session price action moves, and that's the area where there were deemed to be as many buyers and sellers in the previous session. So the 50-day moving average and the neutral swing point in trade on Friday, dollar index is going to find it very, very difficult to close the week too far from that 75.50. There's nothing very appealing in the 1 hour euro dollar chart at the moment. We've had 5 sessions of sideways movement with 1 period of drop in valuation that was overnight reversed. As the dollar index has got the 50-day moving average in place, so has euro dollar. You would expect that in that weighting. So if euro dollar moves, it's going to impact the dollar index and vice versa. Chicken and the egg, which one came first and which one leads, which one follows? It's a question of what is euro really correlated to, and euro at this point in time is correlated towards the movement in the bullion markets. We've got Aussie dollar, the Australian dollar, that seems to be correlated to equity movement, and at the moment euro dollar looks to be correlated towards the movement in the bullion markets. The Great British Pound, been on a roller coaster ride, picked up momentum from earlier in the week off an economic release that was better than expected, and this is what we're talking about in regard to fundamentals at this point in time. The market is fundamentally dominated with technicals just following along. We can see very sporadic price action. 50-day moving average on the Great British Pound is in place, same as euro. Very big trading ranges. These ranges are much bigger than average over the course of the last 3 or 4 months, which tells us speculative interest is high, but the institutional volume is low. Speculators are there to balance the book on the other side of institutional volume, and institutional volume is very, very low at this point in time, which means that potential technical breakouts are having a little bit of a problem in actually breaking and then holding. Australian dollar against the US, when the global equity markets are going up, there's a tendency to buy Aussie dollar. When global equity markets are going down, there is a tendency to sell Aussie dollar. And just to get a visual on that correlation, the top chart is the Australian dollar against the US dollar. So you'd buy the Australian dollar and automatically sell the US, or you would sell the Australian dollar pair and automatically buy the US dollar. Below is the S&P 500, and the correlation is very, very high. So if you are an equity trader or you are an ETF trader and you want to access the moves that are happening overnight, because the S&P 500 moves 24 hours a day in the futures market, and there are some very strong moves that happen outside of the Wall Street session. You can tap into this S&P movement by trading the Australian dollar. Looking at the other major pairs, very, very little of price action of note. Swiss franc, very tight in its trading range. Japanese yen, very tight in its trading range. Canadian dollar, not really wanting to move too far. Really is a case of getting this week out of the way, sitting on the hands until the close of business today, and then evaluating early next week. We will send signals out to you as things unfold. If you do want to upgrade your membership, or you are on a trial period and you want to get a little bit more data and information, if you go to the LFB website, go to the services menu, and you'll be able to pick up the subscription detail, and the customer care team at the LFB will look after you.